Since the triple bottom around October, gold has gained an impressive 12%. Let's look at more details of the short-term as well as intermediate-term outlook for gold. Welcome to myfinancesteacher.org, where we look at fundamentals and technical analysis of a range of assets, mostly focusing on asset price cycles when looking at precious metals, energy, general stock markets, and other commodities. Let's start with this chart of the correlation between gold price and the DXY index, the US dollar index. The blue area is the correlation. As you see, there is usually inverse or negative correlation, although sometimes you can observe positive correlation, as in March and April this year. Gold is in the candles on this chart, and the orange line is US dollar. As you see, often correlation does stay negative. When dollar is stronger in the second half of this year, gold drops down all the way into October and November. Hence, when looking at gold, it's often useful to have a look at what might happen to the US dollar. US dollar has declined significantly over the last month, and it's broken below the 200-day moving average, and even made a lower low compared to the intermediate cycle low back in August. All these are generally negative signs for the US dollar in the intermediate term. But in the short term, the daily cycle, counting this daily cycle from the very beginning of October, is now 62 days old, and usually these cycles last for around a couple of months. So we are getting close to a likely end to this cycle with a cycle low, although sometimes cycles do stretch. For example, this cycle in June-July lasted for 72 days, slightly longer than usual. If the ongoing cycle lasts for a similar amount of time, it might end just around the FOMC meeting, which might trigger a bit of a temporary turnaround in the US dollar. Notice that after the recent Powell speech, the market expects the Fed to be relatively lenient. Not dovish per se, but much less hawkish than the Fed has been over the last few meetings. But with this sort of expectations, if the Fed takes a little bit more hawkish stance than the market expects, that could be the force that bounces US dollar into a new short-term daily cycle. Additionally, RSI on the US dollar is pretty close to oversold. It's actually at the most oversold levels since May last year. So we might see a bit of a short-term bounce into a new short-term daily cycle relatively soon, but the intermediate cycle is only 117 days long at the moment, and usually these cycles last for around half a year. So it might continue down for one more daily cycle with another lower low into that intermediate cycle low, which in the intermediate term is all pretty good for gold price. Looking at gold, in some of my previous videos, I mentioned that once this exhaustingly long intermediate cycle ends, gold would rally at least to this level between 1840 and 1880 that has been tested and respected multiple times over the last couple of years. Since the beginning of a new intermediate cycle, gold has already come relatively close to this level at above 1,800 as of today, with the top of 1810. But looking at the short-term daily cycle, it's already 68 days long, so a correction is likely perhaps relatively soon. As the US dollar daily cycle stretches, however, gold might still continue a little bit higher to test this 1840 over the next 1 or 2 weeks, before the daily cycle tops and gold corrects down into the short-term daily cycle low. So that's the short-term view, but in the intermediate term, gold is still very attractive. After likely correction over the next 2 to 3 weeks, gold will bounce into the second daily cycle of the ongoing, still young intermediate cycle. And as I've also mentioned in multiple of my videos, gold is seasonally strong into the Chinese New Year somewhere around February. So it's still very attractive, and a quick look at the Optimism index agrees with our analysis so far. Historically, intermediate cycles top with this Optimism index at least above 60 or perhaps even well above 70 or 80 as in early 2020. As I've often mentioned in my videos, perhaps it's a good idea to take at least partial profits when everybody is extremely excited about gold price or any other asset. But as currently the Optimism index is just around 41, gold can still run much higher before the market becomes a bit too greedy, a bit too excited. Again, perhaps sometime in early next year. By the way, talking about New Year, our introductory offer of just $5 for the first month of the membership will be removed in the next year. So for the best fundamental analysis on gold and silver miners, as well as regular monthly, very informative uranium reports, and much more, join us at myfinancesteacher.org before 2023. Lastly, give this video a like, thumbs up, and share it with your friends. Have a nice day. Bye-bye.